Welcome to Subramani. This small video is triggered by a lot of nomenclature confusion among people. I mean, the words mean different things for different people. So, when a company says this is my sales, or this is my total revenue, or this is my top line, it means the same thing, right? This is the gross revenue that they have received. This is not profit. Many people are confusing the two. Let me just clarify. So if I make a movie spending 150 crores and then you hear that the box office collection was 150 crores, don't think that I have now made money. I am not yet. This sorry, this is the gross level of collection at the box office. Then there will be taxation which will be removed, then the what I have to pay to the theaters, that will be removed, and then I will get the number. So if it is 150 crores of collection, I may get something like 60, 70 crores, 80 crores. So for me to really earn money, it has to do maybe 300, 350 crores. Then my gross revenue, again my gross revenue, which is different from the theater's gross revenue, will be visible on my books. From that I have to deduct the expenses. Then I can say, okay, from this I remove the expenses that I have incurred, which could be paid, what I paid the director, what I paid the, assuming I am the producer or the owner of the movie, then what I pay the director, what I pay the actor, what I pay for the promotion, advertising, etc. I remove all that, and then what is left is net revenue. So first of all, revenue and income are not the same thing, right? Similarly, cost and expenses are not the same thing. You have to incur the costs, then you will have to make the payment, then it becomes an expenditure. So let me just clarify that even better, that you first incur the expenses, you then pay it out, then it becomes an expenditure. So costs and expenses are not always the same. Secondly, the cost can be incurred now and paid later. So that is the cash method of accounting and the accrual method of accounting. So when I incur expenses, I incur it for a period. That is, income is accrued, expenditure is accrued. Then I actually pay out. So the cash flow is something different. So basics, sales, revenue, top line all mean the same thing, but that does not make it profit, right? This is just the top line. I've just got that money. From that I have to reduce the expenses to come to net income. On that net income I pay taxes. What is left after that belongs to me. That is called net profit. Again, net profit could be before taxes or after taxes. NPBT is before taxes, NPAT is after taxes. The number on which you should concentrate for a company is NPAT. What is it, the gross, what are the expenses, don't really matter as for arriving at the EPS. Don't just get carried away saying, oh, so much. Similarly, words like sales and order. If I am a big infrastructure company, I could get a very big order. I could get a 5,000 crore order to build a bridge, right? It could be a small bridge, big bridge, whatever. Now, that does not mean that that 5,000 crores cash has come to me. No, it just means an order has been placed by a particular government on me. I'm a bridge builder, I'm a construction company, and I may be delivering this bridge over a 3-year period. So technically it is 1,700, 1,700, 1,700. Though it doesn't happen that way. A lot of the money will come upfront as an advance because you have to buy equipment, organize the people, etc. So you will collect an advance. That is true. But this orders and sales are something very different. They are not the same thing. Yes, an order can be converted to sales. In fact, that is the process of doing the business. So when you see an infrastructure company has got 25,000 crores of orders or 50,000 crores of orders, don't get carried away. It just means that they have got that order which has to be done over a period of time, and in a worst case scenario it can be revoked, it can run into trouble because the government changed. All those things can happen. So you should know the difference between order and sales. Even when you use the word costs are incurred to bring the let's say to make the product, right? So if I am a bread manufacturer, the money that I spend on wheat or flour, on water on the electricity to make the dough, those are the costs that are incurred to make the product where it is, right? After that, I incur expenses to bring it to you, which could be packing, which could, I mean, may not be the primary packing, but the secondary packing, the advertising, marketing, the finance expenses, the people expenses, the managing director salary, those are the expenses. So this is cost of goods sold, and these are expenses, right? So the total revenue is what we spoke about, sales or total revenue minus costs to make it. So if it's a film, all the direct costs which were incurred in paying the director, paying the actor, etc. Then the advertising and all that expenses. So in case of a bread, it will be the top line is the sales which you have got by selling the bread. Cost is the direct cost which you incur. I mean, direct cost could be, in this case obviously it is flour, water, electricity, the expenses at the factory, right? So we call them costs. So therefore we call that total revenue and cost of goods sold. So total revenue minus cost of goods sold is gross profit. After the gross profit you incur expenses, right? So all these things when it is paid out is expenditure. So these are simple terms, but don't confuse the two. I mean, don't confuse that gross revenue. Oh, this film has collected 300 crores, they've incurred 150 crores, so they have made profits. No, that's not true, right? You have to see what is the total. For example, a company like say Reliance has revenue 5G, 4G, whatever. So all that becomes the top line. From the top line you have to reduce the expenses, which could include depreciation on the equipment bought, all those things, and then all the salaries, the advertising, marketing, blah blah blah. Then you are left with profit. So understand all these steps before you arrive at a company's profit. Don't just get carried away by orders. They've got so much of orders, doesn't mean anything. They've got so much of sales, still doesn't mean anything. Sales minus expenses, all those things have to be incurred. Then you come to net profit. Now again, net profit, when you see the figure net profit, it doesn't mean the company has got that much of cash lying with it. Then there have to be some adjustments to be made to arrive at the, you should know the difference between net profit and free cash flow. Net profit largely is an opinion of the accountants, including the auditors. They say, okay, these expenses have been incurred, this is how it is accounted, we did an acquisition in Finland, these expenses have been borne by the Indian outfit, and this is a subsidiary. So all those, where do you find them? You find them in the notes and accounts. So go and read the notes and accounts. Company incurred so much on acquisition, so much is goodwill cost, so much of the cost we are writing off. We acquired this as a basket purchase, so such and such a thing we sold off. So apart from that, whatever we have got is revenue, right? So read all that before you know the difference between the net profit and the cash flow, right? So what is the cash flow? First of all, you arrive at something called the net profit. Now after that you will have the net profit would mean some depreciation has been charged, but for the depreciation you did not incur any cash flow, right? The assets were bought long back. So you will go to you will say, okay, this is my net profit, let me add back the depreciation, so that much cash I should have. Then there could be changes in the working capital. I've given more credit, I've given less credit, I've used somebody else's credit, so changes in working capital. Then I repaid some money, right? Then I borrowed money. So all those have to be impacted, all that has to be accounted, and then what you get is free cash flow. If you are confused between net profit and free cash flow, please check the free cash flow. That is more relevant and more important, especially for companies with huge amounts of depreciation, etc. The free cash flow is far more important. You will know whether the company is running profitably, whether it is borrowing more than what you think it is, whether it is incurring a lot of expenditure on buying assets, right, or is it selling assets, right? So you will know all that only from the free cash flow, not from the net income. Even take a simple example. When you have a salary, you get salary, which is your top line, minus taxation. So actually what happens is, if your salary is 100 rupees and you're paying 30 rupees as tax, then you have to, when you make your own P&L, it is 100 rupees which is the revenue. Your biggest expenditure could be 30 rupees, 30% could be the tax. After that, so 100 minus 30 is your net income. because everything that you can do is only after that net income. So from that net income you reduce all your expenses, your day-to-day household expenses, etc. So you think that there should be so much cash available with you. Not true, because some of this could have gone towards repaying a loan, because when you are repaying a loan it is not an expenditure, so you are not reduced from here. Now suppose you are paying 3 lakhs per annum as EMI, 25,000 per month, then should you reduce the whole 3 lakhs from here? Answer is yes, but technically when you are making a profit and loss account, the interest portion has to be reduced already, and then you will be left with this. From this you will deduct the principal repaid, right? So this is easy to understand. You had already borrowed the loan and you are now repaying the loan. That is not fully an expenditure, but the interest portion is an expenditure, exactly like that for a company. So understand all these concepts, that top line, bottom line, sales, orders, revenue, expenses, expenditure, costs, and taxation. Once you understand all this, then you can easily understand how the balance sheet of a company is made. First, this is the profit and loss, and then similarly the balance sheet. Thank you.